But now we got 60 points, 17,555. I mean, actually, even the Nifty IT index has pulled back quite nicely. I think it's in the middle of the range, the day's range. The low on the IT index was 28,714, and we're at 28,932. So almost 50% retracement of the day's fall is what we've seen here. Mehrabun Irani is with us to take some questions. Mehrabun, I mean, IT is a space. Every time you've come on the show, said, well, you've been cautious of the space for a long time now. So well done there. But is it, the big call with IT is if the biggest market is going to slow down meaningfully, then you can imagine much larger downsides. Is that the call, Mehrabun?
I would say that the margins should remain under pressure. I still believe that the story is super. I don't argue with anybody who says the story is not good. The point is at what prices or what valuations are you buying it? The point is the company goes on saying that, okay, fine, we will have higher and higher volumes, business is happening, deals are happening, but the point is at what valuations do you want to buy IT, considering the fact that the cost pressure is going to continue. The thing is that should I go and buy into IT? I would say that if I wear the blue hat of a trader, I think, well, you can go and buy, because last time also when I mentioned that I don't like IT as a space and I believe that the top has come in January 2022 itself, and then the stocks went up. It was a rally which happened. A lot of people started questioning, hey boss, you were saying the stocks are not going to go up. So this is something which is, I need to clearly state that if I am wearing the blue cap of a trader, I will possibly go and use sharp declines to buy into even IT stocks. But if I'm buying from the longer term angle, saying that, oh, the story is good, I would say that I would still sit on the side and wait for better prices to come, because I do believe that the valuations are quite expensive, at least in quite a few mid-cap stocks, where going at 50, 60, 70p, some of them, and people are just chasing it, saying that it's come down by 10, 15, 20% from their highs. This is not the way to look at stocks. When you are buying a stock, you should know that even if it's cooled off from the high, how much it had gone up very sharply in the momentum which we had seen in IT stocks just a couple of quarters ago. So still not very comfortable into buying them from a longer term angle. From the core holding angle, I think another 5-7% off in the frontline IT stocks, I would possibly go and look into them from a longer term holding. But from the mid caps, I think besides maybe something like a Tech Mahindra or something like Emphasis, which business wise looks good, valuation wise, I'm not very uncomfortable now. I think there are not too many stocks I would go and buy into, even despite the fact that last 2-3 days they have come off 5, 7, 8, 10% from the highs.
Okay, all right. By the way, keep an eye out on the bottom of your screen. You're getting some source-based information that's coming in there. 22 companies have participated in Hotel Ashok's monetization roadshow. Remember, this has been a trigger for a while, but the names that are cropping up on the participant list, you have Taj, Leela, Hilton, DLF as well. They could be the probable participants out there. And ITDC, that's the one. Remember, volume's not very, very high, but that's the one that's reacting positively. So let's see the progress on that front. We'll try to get in Sapna to fill us in on this story that and what all she's speaking about there. Mehrabun, any view on this? We've heard about this for the last few years or so. It appears there's finally some progress in terms of the divestment and also the bidding names. You have DLF in there. I think you had Indian Hotels as well. That was part of the bidding list. If you could give us a brief take.
No, honestly, I can't comment too much on it, Nigel, being very honest.
Okay, all right. Well, it's not a very highly traded stock as well. So we'll try to get in Sapna to fill us in, more on that. But Mehrabun, I wanted your view on a couple of other names there. A couple of stocks that are moving up and about today. You have RBL Bank, IDFC First Bank. Now, both of them, in terms of valuations, they don't get very, very high valuations out there. But their past quarters numbers, particularly IDFC First Bank, well, the management sounded reasonably optimistic. Any view on some of these names?
I think IDFC First from the level of 34, 35, 33, I think gone up to 45 rupees. So from a trader angle, possibly it could have run out of steam for the time being. But if you ask me to select between the two, and I think 3 out of 3 times I'll mention I prefer IDFC First, IDFC First, IDFC First to RBL Bank. While there are a lot of people whom I discuss stocks with, they are saying that at the present level there's nothing much to lose in RBL Bank. But my comfort level is still not there, despite the fact that the stock would be ruling at a price at which one should be looking at it. So I don't do things, I don't talk on things, or I don't advise anybody anything which I myself am uncomfortable with. So I would say IDFC first. If you are a longer term player, despite the fact that the stock has gone up from 34 to the present 44, 45, whatever, I think at the present level you're not going to lose money. You'll make money over the longer term. It's distinctly possible after the run-up which we have seen over the last 1.5 months of nearly 20%, 25% from the recent low. I think there could be some profit booking which could happen. It could consolidate, but ultimately I believe the stock should go up, and I have a lot of faith in the management of IDFC First.
Okay, the market. But by the way, there's a lot of stocks sort of which are making comeback. I mean, so sort of forgotten stocks making comeback. One is TBZ. Just look at that stock, 8.5% higher on that one, and Kalyan Jewellers is the other one. I think, in fact, on Kalyan, we are up 10% now. So both these names are doing quite well. But there are a couple of others as well doing well in trade in terms of the recent, the large volume trades. IDFC First Bank, which is up about 5%. And Suzlon keeps moving higher, 3.5% higher on that stock. Mehrbon, good afternoon. I wanted your thoughts on something like an Ashok Leyland. Getting very close to its highs once again on that stock. In fact, this entire auto pack has done well. But view on Leyland?
I would say among all the stocks, I think the frontline four-wheeler companies, I would say that valuation-wise looks the most attractive. So the point is there are reasons why the stock is not getting the right valuation. There are always doubts being expressed. And maybe it is distinctly possible at some stage some money may go out of the best performing stock, which is M&M, which I have a lot of faith in, a lot of confidence in. Only thing is the stock has gone up too sharply, and some money may go into Ashok Leyland. But at the end of it all, I think the story as far as auto goes, I would prefer the auto NCD pack on the whole to the OEMs. So the reason is very simple. Most of the stocks have already gone up very sharply, and if one is buying at the present level, it is distinctly possible that if there is a correction in the market, you may get it lower. So after the sharp run up, do I go and buy into an M&M right now, or maybe even an Ashok Leyland right now? My answer is, if I'm a trader, I would possibly avoid. But if I'm wearing the red hat of an investor, I would go in for M&M at number one, Tata Motors also joint number one, followed by Ashok Leyland.
You know, another extremely high P multiple stock is Trent. I think Trent had once gotten to 100 times earnings. Just 2 days back, stock was at 1550. It's at about 1350 now. Despite the 2.5% move today, any thoughts, Mehrbon? One is Trent, and if you want to comment in on PVR, which is also corrected, sharply, very quickly. Yeah.
I would say that Trent, along with many other stocks, I think are great companies. People like to own them. People don't like to sell them off in a hurry. Another name which I would say in passing would be Page Industries. How do you justify buying at the present level? The fact is, the floating stock is just not picking up, and there are new people who are coming and buying at the stock, possibly every correction that the stock has. So there are no ways I can possibly defend the valuations of Trent or even a Page Industries at the present level. But despite that, I know that not many investors are going to sell off in a hurry, because those investors are holding the stocks for a very long period of time. Coming to your question on PVR, I've been quite negative on PVR. I think we all know the reaction with the public is giving as far as collections goes to movies. The footfalls are just not happening. The reasons are very simple. I have been watching movies. I am a close watcher. I have been watching movies for the last many years. Let me see. I used to see 1 or 2 movies every week. And I personally believe that, and you can argue with me on this, that 95% of the population of this country is not visiting a movie theater even once in a period of 6 to 9 months. The reason is, how many of us can afford to spend 3,000 to 4,000 rupees with a family of 3 or 4? The balance 5% are going. So you go on increasing the ticket rates just to manage the collections and possibly try to earn something for yourself, but it's just not happening. So it's not a very easy wicket going to be going ahead for PVR. They will have to possibly try and work out on the business model itself. So despite the sharp correction with the stock has seen, because quite a few movies of late have gone down under, I will not be in a hurry to possibly go and buy the stock or ask anybody to possibly look at it favorably. The management may be good, they would be very aggressive with their plans, but at the end of it all, I don't think movies is a place which could be common for most of us. A year later, the OTT platforms have become very common. People are watching movies now on the OTT platform. So movies, spending money, I think that is past it. I think a lot of people were arguing why this movie never did well. Was it because it was boycotted? Answer is no. The point is people are just not able to afford it. Make the movie, make the ticket 100, 150 rupees, and I promise you the collection will improve.